Why dividends are the real MVP of retirement. Retirement isn't just about stretching a dollar, it's about making those dollars multiply. High-yield dividend stocks don't just sit pretty, they pay you regularly. And when you reinvest that income into other undervalued gems, you trigger the magical effect of compounding, aka making money while binge-watching Netflix in sweatpants. Pick number 1, Energy Transfer LP, ET. Sector, Energy Midstream. Dividend yield, 6.9%. Valuation, bargain bin for the quality. ET isn't drilling or refining, it's the toll collector of the energy world. It owns pipelines, terminals, and storage across all the major U.S. producing regions. Thanks to recent acquisitions, like WTG Midstream, it's bigger, stronger, and cash flowier than ever. 2024 highlights. $15.5 billion EBITDA, up 13% YOY. $8.4 billion distributable cash flow. 1.6x FCF coverage, translation, the dividend's safe. Global growth, local power. ET's jumping on the LNG boom with a 20-year deal to supply Chevron and tapping into data center demand by feeding natural gas to power-hungry cloud facilities. With over 70 prospective data center connections in the pipeline, pun intended, ET is gearing up to ride the tech revolution, profitably. Credit-backed and undervalued. ET has a solid BBB credit rating, a net debt-to-EBITDA ratio of 4.2x, and trades at just 5.65x cash flow, a steal compared to peers like EPD and MPLX. Seeking Alpha's quant gives ET a 4.5/5 strong buy rating. That's as close as Wall Street gets to saying, "Shut up and take my money." Pick number 2, Starwood Property Trust, STWD. Sector, Commercial Mortgage REIT. Dividend yield, 9.6%. Tagline, we pay. Every quarter. Since 2009. Starwood is the real estate lender that doesn't just dabble, it dominates. It's got a multi-cylinder engine, commercial mortgages, infrastructure loans, residential lending, and some physical real estate sprinkled in. Portfolio breakdown. 54% commercial lending. 21% residential/infrastructure. 13% physical properties. Just 10% office exposure, no mall REIT nightmares here. Stability you can count on. Starwood hasn't cut its dividend ever. It paid 48 cents per share in Q4, fully covered by earnings. And while that dividend hasn't grown since 2014, it hasn't shrunk either, not even during 2020. Liquidity and leverage. With $1.8 billion in liquidity and a 2.1x debt-to-equity ratio, low for this space, STWD is sitting pretty. For comparison, BXMT has 3.5x leverage and more exposure to troubled loans. Only 4.6% of STWD's portfolio is impaired, which means 95.4% is performing. That's some serious resilience in a tough market. Quick snapshot. Metric Energy Transfer, ET, Starwood, STWD. Sector Energy Midstream Mortgage REIT. Yield 6.9%, 9.6%. Dividend growth 5 to 7% guided flat but reliable. Payout coverage 1.6x fully covered. Leverage 4.2x net debt/EBITDA 2.1x debt equity. Valuation 5.65x cash flow 0.7x book value. Why now? Because both are undervalued, and income compounds faster when you're reinvesting at a discount. A 9% yield doesn't just make retirement sweeter, it shortens the road to it. Dividend income gives you flexibility. You can reinvest for faster growth or use it to cover living expenses. Either way, you're not forced to sell shares just to survive. The bottom line. ET and STWD aren't fads. They're serious cash machines with management teams that understand how to allocate capital, manage risk, and pay investors like it's a religion. ET gives you energy infrastructure plus growth from LNG and data centers. STWD delivers steady income from a diversified real estate lending portfolio. Want to build real retirement income? You start with companies that pay you to wait, and wait happily. Join the conversation. What's your go-to high-yield stock? Do you think ET's future is tied too closely to fossil fuels? Or is STWD's flat dividend a turn-off? Drop a comment below and let's talk high-yield strategy. And if you're into curated portfolios, insider insights, and avoiding financial heartburn, check out IRET plus Hoya Capital for more picks like these.